Hello and welcome back to Swing Trading Masterclass by Wealthy Education. In this video, we'll take a look at something called the Moving Average Convergence Divergence Indicator, or MACD. So to pull the MACD up, you click on Indicators and Strategies and type in MACD. Make sure you do not hit Strategy. You want to hit Strategy. And you see it brings up a secondary window for the indicator. Now, as I zoom in, you'll see that there is a histogram and there are a couple of moving averages. So it's a 12 and 26 moving average. The moving averages cross just like they would if they're on the chart. And if you plotted these moving averages on the chart, they would look the same. The MACD takes them off the screen so you don't have to worry about them. And then it plots a histogram showing whether we are going higher, lower, what speed, etc., etc. So a lot of traders actually don't use these, especially like in the Forex world for whatever reason. However, they do have their use. There are a couple of different ways to look at the MACD. You know, you look for moving average crossovers like this. That could be a sell signal. You look for what they call a zero line cross. That could be a buy or sell signal. So you can see that we have crossed above the zero line, and that shows momentum is starting to work in favor of the buyers. So that would have been a buy opportunity there. You may have exited once these crossed. So that is one way that traders will use this. They will wait for some type of break, if you will, of the MACD. So right here, we break here. We cross here, you get out there. So that's pretty useful, zero line and a cross combination. And then there is another way that people will look at this, and it's called divergence. And they use divergence of either the moving averages or the histogram to decide whether or not they should, there's a potential reversal coming in the market. So for example, take a look at this right here. You can see that the market made a new high, but the moving averages down here and the MACD were lower. So it was a lower high and a higher high. That shows that perhaps we are running out of momentum, and we did drop from there. It is worth noting. You can also use the histogram to measure that as well. You can see that the histogram is high here, and by the time we get over there, it's definitely much lower. So the histogram, the moving averages aren't cooperating with price, so that's a bit of a heads up. So, for example, let's take a look at some potential signals. Potential signals, crossover, zero line cross right here. So that was your trade. We crossed over. Do we short there? Maybe, but not necessarily. We want to see some type of an agreement, hopefully. Once you get the histogram dropping below the zero line, then you can consider that. The problem is, as you can see, that it really wasn't until here we broke down there. And like moving averages in general, it doesn't work well in a sideways market. You're looking for breakouts or breakdown. So that's, that. And of course, the divergence was the real sell signal over time, and that's exactly what happened as we dipped back into the red in the histogram. Let's go ahead and put the MACD on the Select Spider Trust Energy ETF, and you can see that we had crossed over right here, and you can see that it was right down at the absolute lows. The histogram did go green. That is a buy signal. So is the cross here. So you really don't have a sell signal or a close signal until here. It worked out quite well, quite frankly, in that instance. You'll notice how the histogram's pretty short here. The moving average is kind of hugging around. Well, that tells you the market isn't doing much. So in that sense, the indicator did its job to keep you out of that trading environment that really wasn't doing much. When you look at the Ethereum market, you can see that it works quite well there as well. MACD crosses right here a little bit later than the absolute low, but it makes sense. You want to see momentum turning to the upside. you get confirmation, or a little bit more confirmation, I should say, with the histogram going positive, and then another confirmation when it goes green here, and you continue to rally. The cross was right here, so you could have gotten in any of these 3 times and gotten out there, or at least, move your position to break even at the very least. Got another cross here, starting to reach down towards the 0 line. It is possible that Ethereum is going to fall from here. Obviously, we don't know that, but it is showing signs of possible exhaustion. Here is a MACD cross of the moving averages. The histogram starting to drop lower. So you get a cross and a negative histogram. That begins the move all the way down to here. 0 line cross here, pretty positive sign, all the way up until you get that cross there. So you can see how this works out quite nicely. Again, divergence is important, but that histogram, when it's really tight like that and the moving averages aren't doing much, that tells you you're in kind of a range-bound, sloppy, sideways market.